It's Rick here with your market recap for Thursday, October the 6th. Had a forced day off yesterday as both my computers crashed. So fortunately, I was 100% in cash, so didn't much matter. So it was a good day to go for a nice long walk and clean out the garage. So um, some benefits to that. No change to our risk model as the market has really gone sideways for the last 2 days after the big up moves on Monday and Tuesday. So we'll see here when we get to the charts. That. Move this. So yeah, we had the big up days on Monday and Tuesday. Yesterday sort of went sideways. Today is pretty much the same. So anxiously awaiting the jobs report in the morning. So as to where we can go from here. I thought I would I'm going to expand this. This is the S&P 500 on a weekly chart. And if you recall from our previous video, I drew this line here, pardon me, which represents the high from pre-COVID. And to me is a potential logical support area or where we could drop down to. And actually, I could even get worse than that. So I just want to get people prepared just in case that things get nasty and where we could go. So if I trace from when we came out of COVID and the 40-week moving average started to move up back in this period here, which was June of 2020, this bull market, if we want to call it that, lasted for pretty much 2 years. Technically the peak was up here in December, but the moving average was still climbing and started to settle out around March, April. So essentially 2 years of this. So my premise is, I mean, if it can go up for 2 years, why can't it go down for 2 years? And this is what it might look like. So if we take this moving average and it's now in a downtrend and we just extrapolate it forward, I mean, it's going to have wiggles along the way, obviously. And we go out 2 years from, well, let's just take the peak of last January. We go to January of 2024. Yeah, there we go. That's November. That's about as far as my chart can go. So that's a potential that could happen. Now, for all of us that are in cash, like who cares? Other than we're not getting any return, and I'll get to that in a minute. What we can do, but virtually nothing. And also from a chart perspective, if I look at this peak here, and this was a lower high, and this is a lower high, then we had these lows, and they just have been progressively getting lower. So if I were to draw a trend line on that, it bears out where we could go. And we take this high here, and this gets a little choppy, but that's sort of the range of possibilities on the downside, where we could go. And so that's kind of a scary thought. So those of you that are not in cash yet, again, as I said on my video a couple of days ago, let's go over to the daily chart here. I would use this low here set last week as my line in the sand. So if the S&P gets below that, you should be in cash. You somehow get into cash and wait this thing out. Because there's really nowhere else to go. Let's expand this back out again. If you say, well, let's go to bonds. Let's look at a chart of the bonds. Nope, that's even worse than being in stocks. So, well, maybe we should put it all in gold. not as bad. I don't know about you. I don't like the risk of putting everything I have into gold bullion. So that's not a very palatable option for me. So how about the one thing that's going up, corn? That's a great looking chart. It's been going up for 2020, so it's going up for about 2 years now. So perhaps we could take our money and rush out to Chilliwack and buy a bunch of land and plant some corn. But geez, by the time we get the ground planted and do a harvest and whatnot, this price may have rolled over already. So that's not really a very good alternative either. So in essence, there's just no place to hide. So you could say, well, my cash is not earning me anything. Why don't I buy a GIC? So you can get a fixed GIC for 90 days at 1.25%. And the way I look at that is that if I had $1 million in cash and I get 1.25% for the next 90 days, on an annualized basis, what's that, $12,500? So for a quarter, that's $3,000. Big deal. If you keep your cash in your market account, and things do turn around, they're not as gloomy as I paint them to be. You can make $3,000 in one trade in a week. So to me, that's just not a great option. And I think if you want to lock it up, non-redeemable for a year, you might get 4%. Same story. If you're content with 4%, fine. That doesn't suit me. Again, if markets turn around here, you can make 4% in 2 weeks or a month. So to me, that's not a great option. Let's just go back here. We'll look at the rest of the market, QQQs. I remember about 2 weeks ago when we were on this day here, I drew these lines saying, you know what, the bullish scenario was we could go right up to the 200-day moving average here. Or another scenario says we take out this low, we could drop down here. But it didn't go down as quickly as I drew it, but guess what? It went down there. So I don't know where we go from here. My bet, not a bet, but I would be more optimistic if we get above today's high, above this level here. I would be inclined to put 25% of my investable cash into QQQ or the spiders, and have a stop here for half of the position and a stop here for the other half of the position. So your total risk would be in the neighborhood of about 4%. So if you use 25% of your account, risking 4 and they both get stopped out, I mean, the total hit to your portfolio would be less than 1.5%. So to me, that's a decent risk reward. That if things turn back up, because the logical target is for us to get back up here to the 200-day moving average, which by another 10 days or so will be down here around 312. So we could get an 8 or 9% gain in that period of time for basically what did I say, a 4% risk. Still only 2 to 1, but it might be worth taking. And then if we keep going up, we can add to that position. But bear in mind that this is sort of my ultimate target here. So that's my take on the market overall. As I said, I went to all cash. The one position I did have, I was regretting that I sold it day before yesterday, because that was this AZPN. Remember, I was down here somewhere. 221 was my entry right there. And I exited along the way and finally exited the last piece right in here. And it had a sort of a nasty day today, a big reversal bar closing at the low. So I'm waiting for this one. This way give us a re-entry, but it needs to settle down and then base for another 2 weeks or so, and then maybe head back up again. So this will stay on my radar. I did re-enter ARLP. Any of you astute listeners to my podcast probably get the idea that I love these stocks that are breaking a downtrend line. And that's in fact what here. So I'm in at just over 24 and we're up maybe 2%, 2.5%. But this one has a great weekly chart. I did take a small position in First Solar. This stock has been rocketing. There's the weekly. It's basically doubled from 70 to 140 in the last, since July. It gapped out of this base, could have been Tuesday, and then it's pulled back, and I bought the pullback with an extremely tight stop. So either this works, regains up here, or I get stopped out for a tiny loss. And that's another small position in a medical company. Same thing, it broke the downtrend line, although today I got in up here, 2068.58, I think is my number, something like that. But it had an ugly close. It closed right near the bottom of the day. So this one's not looking too brilliant. I had a stop for half my position right up here. So I got stopped out there, and the other half is below the lows from earlier in the week. So again, my loss will be small if this gets stopped out. So that's it. I'm going to prepare, still working on a tutorial for what to buy, when to buy, and so on. But with not having computers, that's been impossible to do. So take care, stay safe, everybody, and hope to have another video out tomorrow.